Hey, and welcome to the John A. McCabe Show, where it's all about accelerating your authority in your business or field of expertise. And we do that by helping entrepreneurs, business owners, authors, experts, and speakers get seen, get heard, get noticed on any device, anywhere, anytime, in as little as 15 hours, also known as the Authority Acceleration Blueprint. Now, on today's show, Real Estate Investing Mondays, I have a great lesson lined up for you. Now, today I'm going to be discussing foreclosures. Now, the show is for homeowners who may be facing foreclosure or real estate investors who want to understand more about the foreclosure process so they can position themselves as the go-to person that's there to help solve the homeowner's problem and get paid very well for doing so. You know what they say, the bigger the problem, the more you get paid for solving it. Now, when it comes to foreclosures, each country, state, province has their own way of dealing with them. Today, I'm going to be discussing how they're dealt with in Canada, and hopefully in an upcoming episode, I'll have the opportunity to discuss how they're actually dealt in the U.S. Now, the key for any homeowner when it comes to being faced with foreclosure is that they really need to understand that there's actually only one way to put a stop to the process. Now, during today's show, I'll share with you what that one and only thing is that puts an end to the foreclosure. Also share the two types of foreclosure in Canada, the difference between the two, the stages of each type, the 5 biggest mistakes homeowners make, and the different strategies that you can use as either a homeowner or investor to stop the foreclosure on the home. Now, foreclosure can be a very stressful time for any homeowner. In most cases, they aren't really educated when it comes to the process, the stages, how to stop it, how it works, options open to them, and the mistakes that so many other homeowners make time after time again. Now, in today's show, I'm going to discuss each of those things more in detail so that you have a better understanding about foreclosure, how you can prevent it for yourself or for somebody else, and how you can profit from stopping the foreclosure at the same time. Now, remember, if you're an investor and helping someone ease their problems or solve the problems, then there's nothing wrong with you getting compensated. So stick with me. I'll be back just after this short transition, and we'll get right into foreclosures in Canada. Hey guys, and thanks for joining me today. If you're a homeowner, full-time or part-time real estate investor, brand new or veteran, then today's show is for you. Now, as a real estate investor myself, I've spent more time than I care to think about sitting at the kitchen table of a homeowner who's facing one of the biggest stressful times of their life when they're facing foreclosure. Now, sometimes I can help the homeowner, but there have been many times when I cannot because they just let the process go too long and there just wasn't anything that I could do in the short amount of time that we had before the courts took over their home. Now, there are other times when the homeowner just refuses to see the reality of the situation and holds out hope that they're going to win the lottery or that this is all going to go away. Now, sadly, I've been called back by some of the homeowners just before the bank takes over the home asking me for help again. And if my offer still stands. Unfortunately, because of their delay, I'm unable to help them in the remaining time that's left. Now, in today's show, I'm going to be going through the information all homeowners, investors needs to know when it comes to foreclosures and how to stop foreclosures. The key for any homeowner when it comes to being faced with foreclosure is that they need to understand that there's actually only one way to put a stop to the foreclosure process. Now, during today's show, I'm going to share with you what that one and only thing is that puts an end to the foreclosure. I'm going to talk about the two types of foreclosure in Canada, the difference between the two types, the stages for each type, the 5 biggest mistakes that homeowners make, and the different strategies that you can use as a homeowner or investor to stop the foreclosure process on your home. Now, the first thing I'm going to cover today is the 2 different types of foreclosures here in Canada and what the differences between the two are. So the 2 types that we have here in Canada are called the judicial sale, and we also have the power of sale. Now, there's 4 main differences when it comes to these 2 types of processes. Now, the first difference is the extent of the court involvement in the first major difference. Now, in judicial sale provinces, the court is extensively involved in the entire process. For example, ordering the property to be sold, they confirm the sale, the sale procedure, and hearing any application for a deficiency judgment. Now, in contrast to this, there's virtually no court involvement in the power of sale provinces. Can you guess which system is quicker? just give you a hint. It's the one without the actual court's involvement, because we all know courts and lawyers tend to muck things up and take forever. So when it comes to the quickness of the process, the power of sale is definitely much quicker. And I'm going to discuss that a little bit further when I talk to you about the stages and how long each stage actually takes. So the second thing is the instigation of the proceedings. Now, the way in which foreclosure process is started in the power of sale provinces is simply by way of sending a notice to the borrower and current owner of the property. This notice starts the process. Now, in contrast, the judicial sale provinces start the process by way of a lawsuit against the borrower and all who may be liable. And this is typically called the statement of claim, which is what starts the actual process. Now, when it comes to the cost of these proceedings, it's much more costly to do the judicial sale than it is the power of sale. Now, the third reason is, the third difference rather, is the method used to seek a deficiency judgment. Now, in judicial sale provinces, the deficiency judgment action is started as part of the main action, or suing of the borrower via the initial lawsuit. Now, in a power of sale provinces, a lender seeking a deficiency judgment must start an action against the borrower after the property has been sold. So even if you lose your house, if there isn't enough equity to cover all the costs, you still may lose your shirt as well. Now, all the more reason to do whatever you can prior to this actually taking place, or do whatever you can to avoid the foreclosure like the plague. So for all homeowners or all real estate investors dealing with people that are going into foreclosure, definitely it's a huge incentive to them to actually take action. And even in the judicial sale process, it's not the lender that actually sues the person, but if the mortgage is actually CMHC or insured through Genworth, CMHC, any of those insurers, it's the insurance company that will actually sue the homeowner if there is a deficiency judgment as well. So just to clarify that. And the fourth difference between the two are the time frames. Now, the judicial sale process usually can take up to 6 months or so before it's all over. I've seen some go even longer. I've seen redemption periods of 6 months, and I've seen them take upwards of 12 months for the whole process to complete. It really, a lot of times it'll depend on the amount of equity that's in the home. In contrast, the power of sale foreclosure, particularly in Ontario, can be over in only 45 days from the time that the notice has been given. So you can see that there's quite the contrast between the two different processes when it comes to foreclosure in Canada. Now I'm just going to discuss a little bit about the judicial sale process. How that works is a lawsuit must be initiated against all liable parties to start the process, and the court is involved in every step of the way. Now, the provinces that are involved in the judicial sale process include Alberta, BC, Manitoba, Saskatchewan, Quebec, and Nova Scotia. Now, there's six main there's six main stages of the process when it comes to the judicial sale process. Now, the first one is stage one is when the bank issues a statement of claim. That's the legal document that's prepared down at the courthouse and sent out to the homeowner. Now, this is typically after you've missed at least 3 payments on your mortgage, and it's questionable as to your ability to service and finance the financing of your home. So this usually takes place after you've missed 3 payments. The lawyer representing the bank will actually file down at the courthouse what's called a statement of claim, and that starts the action of the foreclosure process. Now, stage 2 is the statement of claim must be served to the owner of the home. Now, the owner has a 15-day period to file a statement of defense. Now, if this is not filed, then the next stage will commence, and stage 3 is when the bank requests in the statement of claim that the court order the home to be sold. Now, the range of time granted by the court is really depending upon the amount of equity in the home and can vary from 1 day to 1 year. The most common redemption period is typically 6 months or less. That's what I see a lot. But it really, as I mentioned, it really depends on the amount of equity. If someone bought a home with 5% down, you add in the CMHC fee. So if they've owned the home for less than 5 years, there's really not a lot of equity there. So the court may have a shorter redemption period than if you've owned the home for 20 years and you have, more than 50% loan to value. Then the bank is a lot more giving you a lot more time when it comes to the redemption period to actually fix to handle the arrears and all the fees that go along with the arrears. So stage 4 is the next stage, and that's when the bank must file the order for sale of the property. This must be accompanied with a property evaluation from an appraisal company. Now, in addition, this step will outline more specifically the dates of the redemption period and how the property is to be sold either by the court tender process or via the MLS at the appraised value. Now, one thing to remember in Canada in these judicial state provinces is the court is obligated to sell the home as close to fair market value as possible. So once a home is actually foreclosed on, and it's a foreclosure home on the MLS, it's the court is obligated to get as close to fair market value of the home as possible, keeping the value of the homes up for the realtors and the real estate board. So you really don't get those huge discounts that you hear about down in the U.S., where you can buy a property for pennies on the dollar at through the foreclosure process, through the judicial sale process once it's actually been foreclosed upon. Okay, so that's the stage 4. Stage 5 is the order of sale must be served to the owner of the home. So these are the stages. This is the process of how this actually all transpires in the judicial sale provinces. And the 6th stage is if the redemption period passes without the owners having the financial capability to pay the arrears, then the home will be sold. Okay, so those are the 6 stages for the judicial sale provinces. So if you're in a home, or somebody is in a home that's going through the foreclosure process in one of those judicial sale provinces, these are the different stages that they're going to be faced with. To give you an idea of the time frames, especially for investors, what's most important is prior to the statement of claim being filed, typically you have up to 90 to 100 days. So from the time you miss your first bank payment, remember you can miss up to 3 bank payments. So if you're on a weekly schedule for your bank payments, for your mortgage payments, once you miss that 3rd week's payment, then they start the process. Now, if you're on a monthly payment schedule, once you miss the 3rd monthly payment, then they start the process. So it varies depending upon what your payment cycle is for your mortgage, whether you're weekly, bi-weekly, semi-monthly, or monthly. So obviously, if you're monthly, it gives you a lot more time to take action prior to the statement of claim. If you're weekly, within 3 weeks, if you miss 3 weeks worth of payments, then the court's actually going to take action. So typically it's after 3 missed payments, not 3 months. So prior to the statement of claim, that can typically be up to 90 to 100 days. Now, after the statement of claim and before the redemption period, that time frame, it really is dependent upon the courts, what the judge has to say, how long they give you for a redemption period, but can typically be anywhere from between the 90 days to 6 to 9 months time frame. So the first 90 days before they file a statement of claim. So after the 90 days, basically you've got a 6 to 9 month window there before the end of the redemption period. And at the end of the redemption period, that's when the bank actually takes over the title. That time frame is usually in around the 6 to 12 month time frame from the time that you've actually started the process. So For investors, obviously, the best stage for you to be concerned with is the very first one prior to the statement of claim being filed. For homeowners, that's going to be the cheapest stage for you as well to come up with the money to pay out the arrears and all the associated fees. One thing to keep in mind, and a lot of homeowners don't realize this, is they may miss a payment, and then they go and they make the next month's payment. So what they think they're doing is they're making that month's payment, but in reality, they're actually paying the previous month. So they just because they paid the money for the second month, that money actually goes to pay the month that they missed, not that second month. So in actuality, now they've missed two payments. They missed the first one, they missed the second one, but they gave the money during the second month, which actually paid the first one back. So if they miss another one, that's 3 missed payments in a row. So which means that they're still in arrears. There's still payments that are in arrears and fees are accumulating. So they've not actually caught it up to date. So that's something to remember and keep in mind when it comes to sort of trying to get, as a homeowner, trying to get out of this situation. Now, profit potential, if you're a real estate investor, profit potential and the time frames for dealing with the homeowners facing foreclosure and the judicial sale. So prior to the statement of claim being filed, so that's within the first 75 to 90 days, if they've just missed a couple of payments at the bank, maybe they just received the notice from the bank as to, the demand notice, catch up your payments, before we take further action, which is filing for foreclosure. This is the place where, as a real estate investor, you have the highest profit potential. And it's the least amount of competition because really nobody knows that the homeowner is going through this process. So it's not registered anywhere in the courts yet. The only people that actually know are the homeowners themselves. And typically they're not out telling everybody that they're in this situation. So what they'll do is a lot of times they'll actually start their searching online to find out how they can fix the problem, how they can fix the situation, because they don't want the home to get foreclosed on. So they're doing all kinds of things, and we'll talk about a little bit later on, we'll talk about the 5 biggest mistakes that they're making. Generally at this point in time when they're stressed out, they don't want to, they don't want the lender to actually start the foreclosure process. So there's a lot of emotion, there's a lot of things, and there's a lot of mistakes that they're actually making. Now, the second most profitable time frame is prior to the final notice of the foreclosure, which is typically the 6 to 9 months. This is when prior to the end of the redemption period. Now, it's possible to make a profit, depends on the amount of equity in the home, and there's a lot more competition because it's now public record. Once that foreclosure gets filed down at the courthouse and the statement of claim gets filed, now it's public record. Now, I know in Alberta there's people that search the court filings every day. They're looking for people that are going into foreclosure or being foreclosed upon, and they're creating a list, and then they're selling that list to other investors, letting them know, making them aware of who's actually going into foreclosure, so that the investors can then start seeking them out, start sending them marketing information, trying to get the homeowner to connect with them to actually try to help them through the process, because it's an ideal opportunity for an investor to make some money, do a deal, take over a home, whatever the scenario is. Now, the third time frame is the foreclosure itself. This is when the owner is no longer in control. This is when the home is actually on the MLS system. So it's by auction or sealed bids through courts, and typically there's a lot of competition. And like I mentioned before, that it's the court is obligated to try to get as close to fair market value as possible based on the MLS system. So bottom line, the homeowner or investor, you really need to take action and make a decision early in the process, and try to get, if you're an investor, try to get the homeowner to contact you early in the process using your marketing material, using stuff online, because typically the homeowner will start their search online for a solution to their problem. So being there, being the person that's positioned to provide them a solution for their problem is key when it comes to getting in front of the homeowner prior to it being public knowledge.